Hey guys, it's Max Convexity. Hope everyone's having a good day so far. Let's start. Let's see what we're going to look at today. This is the daily covered collar, Thursday, August 1st. Market selling off right now. Doesn't surprise me. Yesterday's rally kind of surprised me, but anyway, okay. We'll look at the heat map, then we'll take a look at the Beta's earnings and a Meta earnings trade that I had some content on. In any event, we'll look at the KQQQ positions as well as Defiance and Yield Max positions, as well as the buffer report, as well as the Tesla crash delta neutral trade. All right, a lot of red on the heat map today. Nothing's up except inverses. I've already checked. I mean, it's ugly. It is ugly. All right, so all right, Meta's earnings. So these guys had a blowout earnings, and their stock price jumped about $30 after hours. Even right now at this point in the day, right here, $674. This is what happens when these double diagonals that I'm showing you guys work out right. In any event, this is the profit and loss graph right now. This trade expires tomorrow. The short legs expire tomorrow. But you could see as time goes by, this trade's even going to become a little more profitable, assuming the price stays where it is. This trade could be worth $855 if the price goes down a little bit, down to the 490 area. This trade was actually targeting 490 area, but 500, 510 would work also, 520, anywhere in here. Anyway, that turned out to be a good trade. I'm going to have some more content. It's too late to do that one, obviously, but I'll have some more content next week. But that trade only had $750 worth of risk, and right now is worth about $600 or $700 if it was taken off right now. It could even be worth more tomorrow. All right, so now let's look at the KQQQ positions. Okay, so I saved them right here where it says KQQQ, Cisco and AMD right here. All right, so one of them's down. They're both down slightly. They're both just plain Jane covered calls, nothing special. The only reason they're down is because the market's pulling back today, and the covered part of the call is doing poorly. The call part's doing great. The covered part's hurting when the market pulls back, right? All right. All right, so same deal on AMD, same deal on Cisco. They sold the 50 call. These don't expire till August. These don't expire till August. All right, so now let's look and see what else we're going to do. Let's look at the Defiance trades. Here's the profit box for... I told you the market was selling off now, man. Anyway, there's a big open gap from the day before yesterday's close to yesterday's open, but they're filling that gap right now. Well, in any event, the market's way off, so that would be a big loss on that one, which is QQQY. Here is for JEPY. You could see they're well below their profit box, major reversal there. And then there's IWMY. Boy, that one's bad too. So now let's look at the spreadsheets. QQQY is down 3.5 million. They made 3 million yesterday, but they're losing 3.5 right now. Lost 2.6 the day before. The only good news is the dividend estimate's coming up. It's $1.15. Last time it was that high was, well, with these guys on this one, I don't remember. Maybe the first month it came out. JEPY's dividend estimate is 77 cents. Last time it was that high was April. Well, April was a huge month for volatility because the market pulled back, just like it's doing right now. That's a good thing about these funds that monetize these daily and these intraday volatility. These other day funds that don't mess with daily options, they miss out on this, all this intraday volatility that these guys capture. Look at IWMY. These guys sold this option yesterday for $28. That's the most since I've been watching this that IWMY has ever sold a Russell option for. And it expired out of the money. It was a $1.4 million winner. The day before that, they made $1 million. Now today they're losing 3.4, but market has a pretty nasty reversal right now. IWMY is down 10 cents a share on the month, but the dividend estimate's at $1.21. So now USOI, they only have one option open. They have this put open 1,683 times at the 78 strike price for $1.22. So let's check it out. All right, so USO needs the price to get within inside of this area to have a profit. And so they don't have a whole lot of work to do. And they have till tomorrow also. It's not a daily option. This option doesn't expire until Friday. So they're in pretty good shape. And USO's actually been doing great lately. Let's look back at the spreadsheet. Look at USO's dividend estimate. They've already received 35 cents just in this first week. They're on pace to pay about $1.40. Now, I'm not saying it's going to stay that hot, but these guys are really killing it as far as capturing extrinsic premium. Okay, now we're going to look at the Tesla crash pairs trade. It's taking just a second for the chart to come up. Looks like the pairs trade itself is up 150 bips today. Nice job. Since inception, the pairs trade is down 7.5%, but yield on cost is a nice juicy 13%, and that's just in a little less than 2 months. This pairs trade has been available to been traded. Now let's see how the profit boxes look for this pairs trade. The red profit boxes are for the bearish part of the pairs trade. Yellow profit boxes are for the bullish part of the pairs trade. Yellow's Tesla, red's crash. They're right in between, which is what you want if you're doing the pairs trade. So that's why this trade's up today. Even though Tesla's down, if you had Tesla, you'd be down. If you just had Tesla, you'd be down, right? If you just had crash, you'd be up. But if you had both of them together, you'd be up even more than if you just had crash. Both of them together is the better alternative for today. Right now, crash is up 4.05%. Tesla is down 2.6%. The difference accounts for this 1.5. And also you can look at this 1.5 as yesterday. This number right here, this total return since distribution, or total return including distribution since inception, was actually down like 9%. Now it's only down 7.5. It's you can actually see here it's down 9.06. Right here it's 7.56. The difference is 1.5. You can also see that both lines, the green line and the red line is what matters. It's including distributions. It shows you how the pairs trade has been performing. The first month and a half of the pairs trade is performing fine. And we would expect that. Oh, shoot, I almost closed that. And we would expect that because if you look back, we have to zoom out here. Here was the first month and a half of the pairs trade. 1 week, 2 week, 3, 4, 5, 6, 7 weeks. It wasn't until the 8th week that it broke out. I call it jump the fence, that it jumped above the bullish strikes. And then even when they moved the strikes, every time they moved them, it re-jumped them. So that was a crazy time period. And that caused the pairs trade to lose money, and that accounts for this downdraft on that you see. At the worst point, the pairs trade was down nearly 40% just on NAV. Now, because of the distributions, it was really only down about 20% at the worst point. Anyway, now it's only down 7.5, so that's good. So now let's look at this pair's trade, NVIDIA and dips. And you could see you could see this pair's trade was doing better yesterday. This pair, there's not a lot of room. You want to be between the two strikes. And there's not a lot of volatility lately in NVIDIA, and there's not a lot of room between these strikes. Even if you include the outer strikes, this pair's trade is not doing as well. But we'll see. We'll see what happens. I need to make a spreadsheet so we can start following like we do here. I'm sorry about that. All right, so now let's look at this pair's trade. All right, now this pair's trade's in trouble. They've blown out their bearish profit boxes. So the bearish side of this trade is now maxed out, but the bullish side of this trade is still going strong, unfortunately. All right, let's look at MST. I can't believe these guys don't have a bearish fund yet, but all they have is a bullish fund. The bullish fund is doing all right. The NAV's pulling back, but the covered call part is doing all right, so that's great. AMD rolled the 155 strike into next week. That's in no danger right now. Going in the money. Amazon, they have a 2-strike ladder. They're in no danger of going in the money. Everything looks good with that. So now let's check the buffer report. Let's see. I need to remember to take this damn banner down. Gosh darn it. All right, so you guys can see the buffer report better. I'm sorry I messed that up yesterday. I had that banner up. I'll try to remember to take that down or leave it off or whatever. Now I have this stupid banner up. All right. All right, you can see the red lines are the benchmarks, and that's why the red lines are all at the same point. It looks like NASDAQ's down 2 points right now. That sucks. S&P's down 1.25 point right now, which also sucks. Okay, so SPY-T, unfortunately, is catching every bit of the downside. SPY is capturing more than 100% of the downside, so that's not good. The ones that are doing great today being defensive are JEPI, which we'd expect, JEPY, which we'd also expect. So they have more defensive type strategies. But some of these ones that are more offensive, like GPIQ, I'm looking at you, they do really great in up markets, but they don't do so well in down markets. Sure enough, they're catching just about all the downside. ULTY, that ULTY is the feast or famine. There's no two ways about ULTY. IWMY is showing some buffer here, about 25%. RYLD has some major buffer. Nice job. We could see the same stuff here, just in a different way. Shows the change of the reference asset and then the change of the benchmark. But yeah, SPY-T is down exactly what the benchmark is. The JPY is doing a great job buffering. See, it's only down 74 bips, whereas the benchmark, which would be S&P or SPY, is down 1.25. Well, so the difference is about 50 basis points. Well, okay. See, we could see that on the other end. What causes that? What causes those 50 basis points is these $31 in this option price right here. They sell this option, and when they sell that option, 13 of those dollars, nearly 14, are extrinsic. So they receive $281,000 to pay of income to pay distribution with. And that equals, I was imagining that equals about 0.5% is where I was going with that. But the capture percentage changes Let me just eyeball it. 281,000. It equals more like 0.25%. So no, my suspicion was wrong. So the fund could actually drop a little bit more by the end of the day. But in any event, it is showing some cushion. And that option, those 31 points that they sold, they did it 202 times. They received all this money for it, $638,000. That'll buffer the downside, So, all right. All right, so let's see what else we have. All right, the New Year's baby trade is just kind of boring. It makes money when the market's going down. It's an option position that doesn't expire till New Year's Eve. And it's a get out of jail free for $1 million account. Right now it's worth about 22,000, but if the market dropped 10% from here, or if the market dropped 5% from here, let's just say, it'd be worth 63,000. So all right, so there's that. And then as far as earnings trades go, we have the made earnings trade, which I don't know if I showed you, but I think I did. They hit earnings and it was a great trade, but we're hoping that the Amazon trade turns into the same thing. They announced earnings after the bell today. I have the same exact strategy right here, Amazon earnings. Same exact strategy. This is the profit and loss graph right now. All right, so they'll announce earnings. The stock will either go up, go down, or stay the same. If it stays the same, that's kind of the best situation. Between now and tomorrow morning, if it stays the same, heck yeah, $700, just about double the risk, because it's only costs $360 to put this trade on. All right, so we'll see how it does. But if Amazon sells off bad, this will lose $360. But the good thing is that it makes more if the Amazon doesn't even have to move. But then if Amazon does move up 10% or something, a 10% up move, it's worth $400. 20% up move, it's worth $200. So we'll see what happens. I'll do some more content. Let's look here. So here's the trades for next week, the big stocks that have earnings next week. Lilly, Disney, Sony. We'll probably take a look at Disney and maybe do some content on that. Let's see. We'll just do it real quick right now. We'll see what it would put on a Disney trade. It has to be in next week. It has to be, the short legs have to be in the week that the announcement happens, which is next week. Okay. Okay, so without jacking with it too much, something like that would probably work. This is a really liquid stock. It'd be probably easy, a dime bid-ask spread. This one's 3 cents. There's 715 is the volume. Open interest is 2,800. We'll just save it and see how this trade does, but this would be a good real life trade. $127 debit. So that's not enough money for you to do it 20 times or something, but all right, guys. So I appreciate you for being here. You got some bonus content on that Disney double diagonal. We'll see how that does. We just have to wait for time to pass. This takes advantage of time passing. What we're really asking Disney to do, and it may be too much to do now that they're all involved in politics and everything, but we're really asking Disney just not to miss earnings so bad that they drop more than 5%. So it's just, all this is pretty much kind of a long play on Disney with a 5% buffer. But at the same time, it's an income play. It's also theta positive. You're making money off time decay with this spread. All right, guys. Well, I appreciate you for being here, and I will talk to you later. Okay. All right. See ya.